All right, we're getting everybody in. Happy Friday, everybody. I see.
Do you think we'll have more than 5 or 10 folks tuning in, Melissa?
We had more than 5 or 10 in the first second we launched.
It's Friday before. We haven't had a holiday, a national holiday, in like pretty much 2 months.
Yeah,
So I'm just wondering if people are taking off.
it does not look like it. We got a good crowd coming in.
Oh, good.
All right, so I have some fun trivia for us this month. Let's see if we can, or this week, we'll see if we can stump Rob and Mike. Does that sound fun?
That sounds fun.
Awesome. It does. All right. Can either of you give me the definition of mortgage? Like if you broke it down to what the root word was.
Slow death in French.
Yeah. Death pledge.
Next.
That's right.
Next.
They're
Yeah,
like,
death
all right,
pledge.
this is silly. What was the
I
first?
would have not got that. So
You wouldn't have gotten it?
no,
How about when was the first mortgage ever?
If Mike knew me better,
I'm gonna
Mike knew me
say
better, Mike would chime in here and say, Rob, wasn't that when you were in high school? But he's too polite. It's too nice
no,
for
I'm
me.
not Rob. No, you're far too young for that. I would say sometime in World War One.
Okay. First mortgage ever.
I'll say 1680.
Oh, okay. 1680. It was actually, it tracks actually back to King, I'm not going to say this right, but of Persia, who really ruled like modern day Iran, in the 5th century BC. So they can trace it back that far. Isn't that crazy?
That
But
is
typically, mortgage at
Okay.
its core is a pledge, right, of something for property.
right.
So when you think about like the broad concept of it, that's what they're going off of.
Yeah.
Does that surprise you?
Who?
It does, but I'd like something less a little more current.
A little bit more
Awesome.
current. Okay. What's the home ownership rate? That one we talked about last week. I'm totally I remember it still. I could What do you
Home
think it
ownership
is?
rate.
Yeah.
I'm now done with lunch.
Okay.
Okay.
Um,
What do you
So-
think it is, Rob?
let me tell you where my head is right now.
Okay.
Um, I get a lot of emails, and some of them are valuable and some of them are not. The ones that are kind of in between are I get survey results from different, whatever, oh, how many homeowners regret buying a home? And there are the sensationalist headlines like, oh, 80% of millennials wish they hadn't bought a home. That kind of sensational. The one I got a week or two ago, I actually wrote back to the survey taker because it was in this upcoming moving season, 1 out of 3 Americans are going to move. And I thought, wait a minute, I gotta call BS on that. 100 million people this summer are going to move houses. So I wrote back to the woman who sent it to me, the survey taker, and I said, come on, 100 million. I said, U-Haul doesn't have enough, there's not enough moving companies to move 100 million people in the next 4 or 5 months. 100 million. I can't think of anybody that is moving, frankly. And she wrote back right away and she said, well, this is based on our survey of 1,000 people. And I thought, Yeah, move Audrey, move from their recliner to the couch. Exactly. So anyway, so I get a little bit skeptical about things like that. Melissa, I like your trivia question about going back to what was it, 400 AD? But you could probably go back farther if you want to find people who were borrowing money,
Yeah,
because people have always wanted to borrow things, and then there have always been people who will lend.
it was
Um,
5th century BC to be frank, to be,
oh, BC,
yeah,
yeah,
BC.
maybe. So there were a lot of people who who were anxious to lend, who were in Manhattan this week. Mike was there. I was
Mhm.
there. You were there. Faith was there.
Yep.
There were a lot of people, a lot of TMC, a lot of folks who typically attend TMC events were there. I
Yep.
turn around and there's, Ira with me on his darn phone screensaver device.
That
Anyway,
might be my most favorite thing I saw that at secondary.
anyway, anyway. So
All right.
Mike, you found it valuable. Go ahead, Melissa. I guess we should
Yeah,
introduce Mike.
yeah.
We should actually tell everybody who's on. Can I kick us off like officially and then we can dig into secondary? Is that
Let's
cool?
Sure,
go for it.
sure. I'm
Okay.
gonna have a drink.
You're gonna have a drink? Okay. For those of you that don't know, my Mac does really fun things. So the fact that I just did this, now I've got like thumbs up. But there's all sorts of things you can do with your hands that make all sorts of things happen within Zoom now. So um, bear with me while I try not to use my hands to do funny things.
Yours didn't do it that time. Yours didn't do it.
Hold on. Yep, there's balloons.
Okay.
Very cool.
2 thumbs up, that's fireworks. Yeah, yeah. This is also really entertaining for me. But
Clearly.
I'm gonna kick us off. All right. Happy Friday, everybody. I am Melissa Langdale. If we have not met before, I'm the president and COO of the Mortgage Collaborative. We are super excited to have everybody here on a holiday weekend. I'm like just thrilled that there's so many people that have joined us.
Yeah.
So thank you guys for spending your time with us. As always, joined by Rob Chrisman, and this week's special guest is Mike Pulver, who is one of the first people that I ended up meeting when I was a lender member at TMC. So Mike, thanks for joining us today.
Oh, thanks for having me. Very excited to be here. It was great meeting you then, which I think was probably a good 5, 6 years ago. And I can say that this October will begin, I think, our 7th or 8th year as a member of the collaborative, and it's been awesome. I think you know that I'm a big fan, and we wouldn't be where we're at without the support of TMC. So thank you all that are on the call.
Oh, wow, thanks. Thanks so much. And you're currently the SVP, the Director of Business Development for Genesee Regional Bank, right?
Yes, I am. So I've been here now for 10 years, and we got a great team here. I'm in Rochester, New York. We have the distinction of what's being called the #1 hottest real estate market in the United States, but it's really not a good thing. It sounds good, but it's not. We are, because the inventory is so low relative to the active buyer pool, that houses are listed and typically sold in 5 to 6 days at an average of 13 to 15% above the list price. So it's great for sellers. It's tough for buyers.
Yeah.
And you were, oh, so many things to ask you about, Mike.
Yeah.
I want to come back to that statistic. Melissa,
Sure.
is it okay if I jump in
Yeah,
here?
run with it, my friend.
So, Mike, you're assuming a powerful role in the local organization. Can you mention that?
Yeah. So yeah, I am going to be, if you're asking, I'm going to be the president of the New York State Mortgage Bankers Association. And actually our theme for this year, the theme of the entire event, is called Let's Up the Inventory. And it's a whole agenda around that. And what we're going to showcase is is we actually have created a task force here in Rochester that includes realtors, builders, politicians, to really start to address, it's going to take a while, but some of the fundamental reasons for the shortage as it exists. And we're going to kind of bring our progress to this to this meeting that we're going to have so that we can discuss it, debate it, and try to spread it across the rest of the state.
So, so you created a task force and you decided to create a task force and not a blue ribbon committee. I mean, I'd like to ask you about that sometime, but the press release that I saw, I forget if it was in the New York Times or the Wall Street Journal, announcing your move into the president role, mentioned your wife and the fact that she is a librarian and occasionally dresses up as Batman to read to the children. Is there truth to that? Did that reporter have
Where
that
did
right?
where did that leak? So yes, my wife is a yes, she is a school librarian for 5 and 6 year olds. Um, we do have costumes, and I do have a Batman costume that I wear from time to time, and she invites me in to the school when they have superhero week. So I get my inner Batman out, Rob. It's kind of fun. It's
I
kind of
feel like
goofy. It's kind of
I feel like we're missing out. You should have come today in your Batman costume. That would have been so much fun.
listen. You
Melissa, I
invite me
think,
back, Melissa. I'll do it.
Okay.
yeah, we could have the TMC event in Denver. We could have role playing, uh, and the participants can take that anywhere they want. Um, so speaking of role playing, Mike, you obviously had to wade through Times Square, and I got into it a little bit. I don't know if you I read my commentary, but in today's commentary, the lead off was basically next year it's going to be in the same place, in the same.
Mhm.
So I get an email from the NBA, wouldn't you know it, saying, so Rob, we take it that you don't like the location. And I'm like, oh gosh, you know. And so I wrote back and I said, attendees, a, you know, sessions, a, the hotel itself, it works, it takes a while to get used to. But I said, you know, Times Square, it's just a C minus. And so many people go there and they stay in Times Square. All they have to do is take a block, or they have to take a walk a block or two east or west or north or south, and see other parts of Manhattan that are some amazing sights. But instead, we're sitting there looking at the naked cowboy and the hot dog that tilts up and shoots out confetti. That the role playing thing got me thinking about that. There's Minnie and Mickey Mouse walking around and a big gorilla, and it's so Times Square. Anyway, all right, I'll stop ranting, but I had some banter with the NBA. Apparently, we're stuck there for another couple of years because of this contract that they've signed. And then at that point, they're going to look for some other place to have it.
I have heard that.
Anyway,
Well,
sorry.
that would be welcomed. No, I mean, the one thing, it is an interesting place to say the least. I certainly got my steps in, walking, to all the different locations and, that you had to go to meet with various clients and investors and so forth. But I will welcome a change as well.
There were two highlights for me. Well, a couple to address your comments. The weather couldn't have been better. I've been there when it's rained. I've been there when it's 90 degrees, 90% humidity, and you're going from one hotel to the other. And by the time you get there, you're just drenched in sweat and you're carrying wads of napkins around. But there were the two high points. Well, there were a couple high points, but one of which definitely in the top three, if not the top two. look at Melissa getting ready to receive accolades and kudos. But
Oh,
the
I had no idea this was
TMC
coming.
event, Kittle didn't jump in the pool, which was actually a good thing from my perspective. But the attendance was good. The people, I mean, it's one big happy family, and people were in a good mood, and there were new people at the event Tuesday, I should say, Tuesday evening. A lot of people closed down the bar. I was even there till the end, and there was meaningful discussion to be had, and I liked introducing person A to person B. It was good. It was a very good event. So hats off to the whole TMC crew for having that.
Thank you. We have a great team that pulled it all together. And it was a lot of fun. But thanks for the accolades. I had no idea that was coming.
Oh, yeah. Well, Mike had skipped out by then, so I wasn't gonna bring it up, but
I will say though, I mean, I did get a lot out of it, and I'll just, share with everyone. I probably had on Monday, 5 or 6 different appointments with, various investors that we sell, loans. So I hadn't had a chance to actually meet our rep from Freddie Mac. It was the first time, and that I got to do it from a face-to-face perspective, and as because we are now beginning to sell loans, to them as well. And even though we go through, all of these onboarding calls and you're getting set up, I'm still, there's nothing better than meeting somebody face to face to forge a relationship. And we had a chance to talk through, obviously, this year, the topic of repurchase risk. How are you managing that? That was a really big topic. One of the things we discussed was we actually debated, should we buy repurchase insurance? And we're still kind of doing the pros and cons and the math on that. But it was just good to have discussion, particularly around loans that we've had to repurchase and what we can expect going forward. And I do think, that the wave that, at least what I got out of it, the wave that we went through, and we're a smaller bank, I think it's behind us. I know that risk still exists, but I don't think it's going to be, my hope, as extreme as we probably experienced the first, at least the last 6 months. I don't know, Rob, if you think that's the case, that's what it feels like now.
yeah, the repurchases have died down. I have a in the field actual question that has come up in my world today, Mike, that I want to ask you.
Sure.
And Freddie Mac has gone back to a company to repurchase a loan, and because they recalculated the DTI and found it to be ever so slightly higher than their DTI allowed. The loan is current, and they are requesting a buyback based on the DTI, and the lender is contemplating going back to Freddie Mac, countering with, if it weren't for this private mortgage insurance payment, the DTI would be just fine. And we are working with the borrower to eliminate the private mortgage insurance payment. Is that good enough? Realizing that this is your opinion only, Mike, not that of GRB. Would
Sure.
you, if you were Freddie Mac, allow that?
I think common sense would tell you, yes, you should allow that. The question, though, is deeper, is that quote unquote exception going to potentially impact anything that might be in the MBS, something that maybe they had to, from that perspective. So, in going through this, most of the repurchases that we've had to work through have actually been with Fannie Mae. And our experiences have been that when they have not agreed with the appraisal, that we should have used comp A versus comp B, and we've gone back and said, hey, well, listen, if you don't think the value is X, you think it's Y, then we'll pay the loan down to retain the LTV at the less value that you computed. And we were 0 for 3 in making that request. So common sense says yes, Rob, but I think in practice, they're probably going to say no.
Are you taking some of the sessions perhaps, or at least some of the topics from this event and applying them to the upcoming New York State event? And do you want to talk about some of the speakers that you have coming up in New York?
Sure. So, some of the speakers that we have, because again, the objective or the goal of this is really to begin to try to put together some specific tactics, some action plans to address the inventory shortages that we have, and kind of what we have learned in talking to many different kind of stakeholders on this is that one of the biggest problems that we have in regards to the lack of new construction, affordable new construction. Let me rephrase it, is zoning. It's so old, and so we need to be able to come to the drawing board to have the zoning revisited and changed, which really just as simple as allowing for smaller lots to be used so they can increase the density. When you talk to a builder, they'll say their number one problem is they can't get the density needed to drive down the price to make new construction more affordable. The other part of that is that what we are doing too is we are bringing in some manufactured home dealers to actually visually present. They're really trying to rebrand a manufactured home that, for the most part has a negative stigma to it. But first of all, these manufactured homes can be built inexpensively. They're more affordable. And they're gaining a lot of momentum here in upstate New York. And I think that's going to be one of the tactics is to make manufactured housing lending more streamlined in regards to the process, the title process, and that's going to be a big part. So some of the speakers, Rob, to your point, we have a couple politicians coming. We have a senator coming from Buffalo and one from Syracuse, and they're going to speak up to various housing initiatives that they're getting behind that they think are going to give some legs to helping this inventory problem. So
Good. I was standing in line at to get into New York Stock Exchange Monday night to the ICE event, and behind me was a fellow who we started talking, and I said I didn't recognize the name of the company on his name tag, and he said, "Oh, well, I own a company or run a company or president of a company who basically 3D prints houses."
Mm-hmm.
And so I thought, well, this is interesting. So we talked for a while, and the quick and dirty sales pitch is that, you can produce a house, for a third the cost and a third the amount of time and third this and third, I mean, just amazing statistics versus a wood built house. I mean, some of my summers were spent building houses, and nothing's changed since then. The 2x4s get delivered and the concrete and blah, 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 blah. Nothing's really changed. And so this guy who I'm going to not befriend, but I think he and I will be in touch because I think he carried himself very well and probably would be a good speaker. And I want to learn more about that. But you're right. Manufactured housing does have the stigma. And when you think manufactured housing, you think, oh, gee, I don't want to land on something with a trailer hitch and a license plate. But there are some amazing manufactured houses out there that, put stick built to shame.
Well, and a lot of builders right now are looking at other ways to prefab components of the home ahead of time too, right? So I mean, if you look at a lot of production builders, if you see those trucks going down the road with frame, frame like roof frame lines, I mean, they're all prefabbing those things because it's much easier, and it allows them to, produce a home a lot faster too. So
Yeah.
Yeah, guys, I would share that one of the things that we're doing here is we have a manufactured home dealer. He's the largest throughout the state, and he has bought land where he wants to develop 200 lots to basically create a manufactured home community.
yeah,
And because we as the bank are going to provide the infrastructure financing to help him develop those lots, water lines, sewers, etc. We're actually going with him to the planning board to help him get the approvals for this, and kind of be able to kind of showcase, how much these homes are going to cost, but really to bring, pictures, et cetera, what these homes are going to look like when they're all done, and really kind of show them, if you didn't know that I was presenting this as a manufactured home, would you just think this was a stick built home?
Yeah.
And so we're really going to try to go down this path, because I think these homes, really are going to be built, on smaller lots, but the prices are going to be between 170 to 210, all in 240, 250,000. And in upstate New York, which is deemed a less expensive place to live, builders are building homes at 2,100 square feet for $550,000, $600,000.
Yep.
That's not affordable for most of the community.
I know a lot of builders that have stopped using the word affordable because it's, it has this kind of stigma to it of being, needing something that is $200,000 or lower. And so most builders, because they can't build at that price point, right? They're starting to say attainable.
That's it. There you
You have
go.
an attainable home.
Thank you, Kelly.
I like that.
Yeah. Yep.
That's right.
Kelly.
Yeah. Really attainable. All right.
Yeah.
Don't get me started on political correctness in words.
I don't think it's meant to be politically correct. It's a good, I don't know.
What's
Change
the new word?
strategy.
You're not supposed to use the word homeless anymore. What's the word for that?
I don't know. Where are we going with this?
Displaced? I don't know. None of my
Unhomed.
playground vocabulary and what we called our friends is politically correct any longer. I think
Did
I'm
he
gonna watch.
expect you to be politically correct though?
I'm gonna watch Blazing Saddles tonight.
That's an oldie but a good goodie. Yeah.
All right. Actually, I just realized something, Rob. You said earlier that you had two big takeaways from the secondary, but you only mentioned TMC. What was the other one?
Oh, TMC outshines everything else, but the other one was and I'm serious. I mean, it was very good. It was a very good event. The other one was the climate / catastrophe session that I sat in on. And I met a friend of my son's, Robbie's, named of all names, Kingsley Greenland.
Yeah.
And do you know him?
I know the name. I don't know him well.
Yeah, how can you forget the name? I'm sure he grew up in poverty, right? Anyway, Kingsley, uh, where was I going with this? Anyway, and I wrote, the reason why I kind of glossed it over is because I wrote about it a couple days ago because it made such an impression on me in terms of the information and the fact that insurance companies are really tuned into catastrophe versus climate change, but lenders and servicers are not.
Yeah.
And so I am going to embark on a crusade. No, I'm
Okay.
not going to embark on a crusade, but I feel the industry needs to be educated in this issue. And boy, you really got me going here, Melissa. And Mike, I
Oh, sorry.
apologize for going
No,
off on
go.
this tangent.
Go.
But whenever I mention climate change in my commentary, I always receive emails from people who say that climate change doesn't exist, that I don't know what I'm talking about, that I'm wrong, basically, and I should write about something else. I get the same thing when I bring up politics, by the way. But the fact, and I always reply very politely, that it doesn't matter, Melissa, if you believe in climate change or not, or the fact that storms are more severe now than they were 10 or 20 or 50 years ago. What matters is that insurance companies believe it, investors believe it, servicers believe it, and it impacts the price that our borrowers see on rate sheets. Because if nobody wants to buy a loan on a condo, on a oceanfront condo in Florida because of the hurricane issue, well, then you have to price it accordingly. And it impacts our borrowers. And so putting your head in the sand makes no sense to me. You need to be aware of what's going on out there. And like I said, the insurance companies have the inside scoop because they're looking at this stuff all the time. And they are looking at, not only entire states, but, census districts and area codes and zip codes. And they will price units in the same condominium complex differently, for example, based on where they are in terms of exposure to the elements. So it's a big deal and it's not going to go away.
Yep.
So that was the other, I'll get off my soapbox now, but that was the other highlight for the conference for me in terms of, material like that. It's a big deal.
A big deal, for sure. We hear about it all the time from our lenders. It's actually one of the things we're going to be talking about. We're taking a group of our lenders to DC the first week in June. And so we're having some fun conversations around that.
Yeah. I mean, we talk about, now you really got me going, but we talk about, oh my gosh, the CFPBs out there, Rohit Chopra is talking about, the cost of loans. And for some reason, the credit industry is the bad guy this time around. But the fact of the matter is, first of all, the biggest expense when you're originating a loan, as everybody on this call knows, everybody in the industry knows, it's manpower. It's the LO. If you're paying, a point or a point and a half to a loan officer, that's the biggest expense. It's not FICO or a credit reporting agency or one of the credit bureaus charging, $70 instead of $50. You're paying $15,000 to that LO. And that's a huge expense. But in terms of climate and catastrophes, the issue is that not only is that a consideration, but so many loan officers that I talk to now are saying, the second topic of conversation after interest rate and price is, okay, have you thought about insurance? Have you thought about your homeowner's insurance? Let's take a look at how much that's going to cost you. And for many borrowers, it drives them out of the market. They can't buy the house because, gee, I'm going to have to pay $1,500 a month in insurance. And we don't have that. So we're not going to buy
No
that
longer
house.
attainable.
Attainable. Attainable.
No, I get it. It is a really big challenge. We're seeing it all over the place, and not just for lenders as they're going through the origination process, but servicers, right? As borrowers are getting their coverage, their renewals denied because an insurance company just happens to be pulling out of the state. So there's a lot of layers to that we need to talk about as an industry to find some good solutions. All right, we are all up at time. Rob, any more soapbox? Nope, you're good.
No, I took Mike. I didn't mean to take the spotlight away from you.
No, Rob, listen, let's face it, you're far more entertaining than I am. So I don't want to, take away from that. But no, hey, Melissa, it's always great to, be on the calls with all of you. And I will, if you invite me back, I will come back, dressed as Batman and
Yes.
always looking for a reason to wear the
well.
suit. So
I would love that. I would love that. All right, we'll have you back and we'll have a special like superhero edition of the rundown.
okay, sounds good.
You won't dress up as a superhero?
I'll be Clark Kent.
Okay, that sounds
Perfect.
great. Maybe a little like Superman t-shirt underneath the button up. Can you pull that? Okay. All right.
I think that isn't that a Jerry Seinfeld show trivia question about Superman?
Yeah. Oh, Tony actually put it in the chat. I actually do have a Mrs. Incredible outfit, so we could totally do a superhero edition.
All right.
Fun stuff.
Mike,
right,
thank you
all
very
right.
much.
All right, guys, have a great one.
Thank
We'll
you
see
guys so
later.
much for joining us today. Thank you, Mike. Thank you, Rob, for a great discussion. Hope everybody has a fantastic long weekend, and we'll see you back here next week. Bye, everybody.
Sounds good.
Yeah,
Bye.
okay, bye-bye.